I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Bill Wolf, the Chief Investment Officer of Archblock, with us. Bill, welcome to the show, and thank you for taking the time.
Ashton, my pleasure. Thanks for having me.
You're very welcome. Excited to dive into Archblock today. But first of all, I'm fascinated with a little bit on your background. What led you to getting to this part of the space? I know you have some extensive experience, and I'd just love to hear on that story and how that led into Archblock.
Appreciate the question. So, and it's pretty straightforward and simple. I was a traditional finance guy for 30 years between investment banking and also working in specialty aviation finance, which was a credit-related business. And I enjoyed every minute of that. But as I got to a point in my career where I was fascinated by what was going on in technology, and I learned a little bit about the blockchain, I realized, this isn't my insight, I'm parroting off of others, that it was the future of finance. And I decided I was at a point in my career where I could get involved. And so I went and started working with a startup that I had been an investor in. And they needed somebody with some traditional finance experience. And I was up for the adventure. And it's been a blast. I've been working here now 2 years, and it's the most fun I've had in my career. Full stop.
Amazing. That's great to hear. And, out of all of the different avenues that you could take in blockchain, what made you resonate with Archblock? And, what sort of is Archblock for those who aren't familiar?
You bet. And we've gone through some name changes, which I won't bore your listeners with, but Archblock is really two things. We're in two businesses. The first business that we got into were stablecoins, and we are still a major issuer of stablecoins. The stablecoins are dominated by Tether and USDC, which people know very well, but there's some institutional grade ones like ours that are also out there in the marketplace. We built that first because we realized that we needed an institutional grade stablecoin facilitate where we thought we were going next. So we're still in that business. We run, on behalf of a consortium, we run TUSD, and we also run some other non-dollar currencies as well. That underlying know-how and technology led us to the next product that we launched, and we launched the TrueFi protocol, which is a lending protocol that facilitates borrowing and lending on the blockchain. And I got involved with this company as an investor originally, just through some friends of mine who were familiar with the founders, and I got introduced, and I was curious about it, so I invested. And then when I realized what they were doing, it touched the part of finance that I knew a lot about, which is about credit and lending and capital formation and deployment. And so that's why I wanted to get more involved, because there's a lot of, obviously, blockchain and crypto is so broad, and there's so many different use cases going on. The vast majority of those I have no background in and would not add any value, but this is one where my background played to it.
Amazing. And I want to dive into both of those, both the stable coins and the credit side. You mentioned there, there's a lot of different types of stable coins or different ways that they're backed. And most people know Tether and Circle as the two coins that are on a lot of the exchanges. But there's a lot of these institutional ones that I feel are very important, probably more important for institutional adoption of blockchain technology and for people that are looking for other ways that these coins are backed. I think that there's no 100% best way to back a stablecoin. I feel like it's still in a trial and error almost area. Maybe you can talk about your research into that and how your team's coin is backed and why you think that's the best way.
Fair enough. And you're absolutely right. It's a very generalized term that gets applied to a lot of different things. And that's not helpful to the user audience out there because they can't distinguish between them. Not all stable coins are stable, and they're very different. Our approach was the following. We were trying to develop processes and technology that made the clarity and the assurance of the backing as transparent as possible. And so while USDC, which is the Circle / Coinbase coin, and Tether have adopted some of the things, we were the innovators on many of these things, like real-time attestations and the ability to know that the stablecoin is actually fiat-backed. So ours is similar to theirs, those two that I've mentioned, and there are others. This is not supposed to be a treatise on stablecoins, but ours and our approach to this is specifically on trying to be best in class on developing this underlying technology. What we've done is we've now developed this processes, and we're in conversations with a lot of strategic partners who are thinking about developing stable coins for other more specific niches, and they're going to license our technology in doing that. And so we're very proud of the fact that we built this system, and it's all the way from the KYC, AML side to onboarding the customers to interfacing with the real world banking system to make it as smooth as possible to have real-time minting and redeeming. So that's the biggest part of our business. And so it is the same for us in terms of it's backed by fiat and or qualified investments. And that is a similarity between us and them. But our approach is we're really trying to develop these software and smart contract systems and interfaces to the real world and spread that out as far as possible.
Great insights. And with people there's a lot of people in traditional finance that have yet to get into stable coins or learning about the advantages of this technology. If one of those 20-year veterans of traditional finance came to you and said, at a high level, how exactly does this part of blockchain technology transform the global financial system? Can you give them like an encapsulated answer that clearly explains the shift that's going to happen and why it will happen?
Well, it's a great question, and you're absolutely right. I mean, we're still so early in the early adopter phase. We have not hit that steep acceleration, even though we're talking about billions and billions of dollars of stable coins that are in the marketplace today. My simple explanation is the following: is that at its simplest form, the international banking system is built on very, very old software. The SWIFT system that people use to wire money around the world, that companies are doing today to the tune of trillions of dollars every day, is very, very old, antiquated software. It's also centralized, and it's not highly transparent. And so what the stablecoin system is going to do is create best-in-class utilization of the newest software, blockchain software, to create highly transparent, real-time transactions, because you don't get your wire into your bank by 2 p.m. on Friday afternoon. Your money's not moving until Monday. And that's just not true. So it's the transparency, the real-time nature of it, and the fact that we're going to obsolete this system. Now, there's a bunch of people with very strong vested interest in making sure this doesn't happen. Those are the big world money center banks around the world. This is threatening to them. They made good money on that. You see a lot of them now cutting their fees, et cetera. So my message to traditional finance folks, of which obviously I represent, that's where I spent my career, is you don't have to go all in on this, but this is inevitable. And again, it's not just, a small startup, Archblock saying this. Very big, prominent financial folks are talking about this. Look at Larry Fink at BlackRock, et cetera. They're all talking about tokenization of assets and how important that's going to be, and that it's going to be on the blockchain. Well, the single simplest first use case of tokenization of assets is tokenizing fiat currency into stable coins. And so that's how I explain it to them. And a lot of them say, okay, great, I'll get there when it's really mass adopted. But there's enough momentum on this that it feels inevitable to us at this point.
Yeah, no, great perspective. And it's crazy to see, fighting something which in the old system, there's so many restrictions of, if you don't get your money in by 2 p.m. on Friday, all of a sudden it's going to take days and days. In blockchain, people, they know Bitcoin has like 10 minutes, and in some of these other blockchains, it's instantaneous. And to see that major difference, it's like, man, why they should at least be dipping their foot in and figuring out how they can get onto this before, it's too late and they fall behind. And you mentioned there about tokenization of fiat currency. I feel like tokenization has a lot of different opportunities. Once that happens for the entire financial system, all of different financial instruments and real world assets and real estate and all these other things, what do you see in that process of tokenization, in that that order of fiat currency and then the whole financial system? Or
well, it's interesting because, when we first started trying to do this, we went to the very extreme of using our lending platform, TrueFi, to do lending to a very, very emerging sector, which was lending money to crypto market makers and delta neutral crypto hedge funds. And we did that because there was a huge appetite for borrowing capital and using our protocol. the world changed in the last 18 to 24 months. And I don't mean just in the crypto world. I mean in the overall risk on world. And that market no longer is there for us to prove out this process of tokenizing loans and financial assets. So ironically now, where it's centered on is something much more simplistic, but I think it's actually much more logical as the next step beyond stablecoins, which is others have done this. We're about to do it now using our software, which our software is very well tested. We did over $1.7 billion of lending on our software with zero hacks, no money, slipping out of the system, et cetera. We're going to launch we're going to help a manager launch a T-bill strategy. And a lot of people are like, well, why do you need T-bills on the blockchain? Well, the answer is because in the back to the traditional argument to traditional finance, you want to buy T-bills, you don't get your order into Schwab or Fidelity or wherever your brokerage account is by Friday afternoon before the market closes, you're not buying T-bills that day. And we're going to create 24/7 accessibility, highly transparent. You'll know exactly what CUSIP number of T-bills are backing your tokenized asset. And so now we're back to this, moving the continuum out. So I think the progression is going to go from the safest, most, what I would call everyday assets, moving towards the more exotic things. Even though, ironically, these safest asset areas like cash and currency in the banking system, which stablecoins are trying to supplement and complement, or T-bills, are very efficient markets, but they're not 24/7 and they're not totally transparent. And so that's how we think the evolution is going to go. If risk comes back into the financial markets, then maybe you'll see us moving faster onto tokenizing of things that are more exotic or have higher, octane yield, if you will. But ironically, the contraction of risk appetite has made it so that we're doing what I think is a much more logical progression from the safest assets moving forward. Hopefully that made sense. I know I was conflating a bunch of different concepts there.
Definitely. No, it's great insights, and there's just so much to unfold, especially for people that aren't familiar with tokenization in just the different ways that it's going to revolutionize and make the financial system better. So it is very exciting, but it also requires a lot of research to get it right.
It does.
And with the tokenization of fiat currencies, there's also the discussion of central banks looking at tokenization in one way or another. I'm curious on your insights into how that's working, and if they're going to use the same technology that the crypto companies are using, or they're going to use different technology.
So, great questions. And again, I know we're not trying to spend all of our time just on one topic, so I'll make it as succinct as I can. There's a lot of experiments going on. China is experimenting with it way out there in the forefront. There's several other governments that are very far along. Even the U.S. government is experimenting with it. We think that's going to take a long time. We think it's appropriate for it to take a long time. And people forget about how the fact that there was currency evolution in our country, because we used to all have to carry coins with gold, with precious metal content to transact. And people don't think of it this way, but when paper currency came out, that was a technological evolution of money. Well, that took a long time to take hold. In fact, it was first done by the private sector. Private banks issued paper currency before the government did. So I think the same thing is going to happen here. I think we are out there showing the governments of the world what's possible about this. We're making mistakes. They're learning from us. They're going to adopt it. I think we're definitely years, but maybe decade or decades away from from that coming. And so I think it's going to be slow. I think they're going to be cautious. I think that's appropriate. It has all sorts of macroeconomic, Federal Reserve like considerations for them. So we welcome that. We've had the government make inquiries to us on a very friendly basis, saying, "Hey, we'd like to learn a little bit from you." We do that through the Blockchain Association, the lobbying group, and we're open to that. We realize at some point they may put us out of business in our stablecoin business if that comes along, and that's fine, because at that point we'll be well further evolved down on what we're trying to do and what we think will be the interesting frontier to make money from a blockchain software standpoint.
Great perspective, Bill. And with those government currencies, it's almost like same as the banks. You don't want to be the last country in the world to adopt this technology. And what you mentioned about the private sector leading the innovation, I feel like is very important. And to have North America and the U.S. not stifle that innovation in the private sector, I feel like is important, because if they do, then it might hurt them in the technology that they want to adopt. When they're looking at these something versus China.
Boy, Ashton, you just hit on my number one cause celeb, which is begging our government to be move faster on regulation. And again, I understand the legislative process is by definition cautious and has to be careful, and they can't get too far ahead of themselves. I'm privileged in my local district here to know my congressmen, and I don't get a lot of airtime with them. When I do, I say, hey, I know you got a lot on your plate. I know you got a lot of priorities. Please focus on blockchain regulation, because the absolute void, and you said North America, and I'm glad you said North America, because it's the whole region is like this. We just want rules that we can follow. We're trying to be compliant, and the risk is exactly that, is us falling behind from a innovation standpoint, whereas North America has been such a font of technological innovation, we're at severe risk of falling behind. Mm-hmm. Huge issue.
Yeah, well, I've seen some of the discussions back and forth with the SEC and some of these crypto exchanges, and it definitely could be better, like guidelines in the ways to move forward. And I feel like the clearer the guidelines, the faster these private companies are able to innovate and just stay on top on the global scale.
Couldn't agree with that more.
Yeah. And now, continuing on the private sector, I feel like there's a lot of different ways that tokenization can help with private investment and private funds. I'm curious on where you see that right now and bringing that innovation in, and what are the hurdles for tokenized private funds, so we can actually, get that as something that's a great use case to prove tokenization works.
No, I'm going to tie into what we were just talking about is the first hurdle that's evolved over the last year, which is confusion and conflation with other things going on in crypto. And I'm going to make an analogy here, which all analogies fall down somewhere, but I think this is helpful. When the internet first came out, there was a lot of really bad business models and people slapping .com on their business, and everyone assuming that they had a real technological offering, and they really didn't. The same thing has happened here in crypto and blockchain. Is there's so much fear, good old FUD, that's come out as a result of the extraordinary amount of just fraud and incompetence that's happened over the last year. So the single biggest hurdle to tokenization of assets is people being just afraid of blockchain in general. Mm-hmm. At Archblock, building on top of our public domain and DAO governed TrueFi protocol, we're out talking to asset managers and proselytizing and saying, hey, come try our software for all the advantages it has to run your asset management fund. And the single biggest resistance point we have is they say, I just don't want to be associated with that until there's more regulatory clarity, because I don't want people to be thinking of me in the same breath of some names that have now come infamous. I'll just use the most infamous one, FTX. And so that's the single biggest hurdle to that. The second is the following, is that a lot of finance is quite efficient. And so going to them and saying, I'm going to improve your efficiency, some marginal amount, is not enough to get people to scrap the existing systems they have. There are very elaborate, complex systems that manage assets on chain. I'm talking about custodial systems, asset management gathering systems that allow investors to put their money in, et cetera. There's one other thing that's important about those. They're centralized, which creates the ability of people to charge economic rents for people to access them. This is in the form of commissions. These are people that make their livings off doing that. That's the other big hurdle is that it's all very centralized, and these gatekeepers are controlling it. Well, the good news is, and I mentioned it a little bit earlier, that the big firms have recognized that this is going to be the future. And so the fact that you've got BlackRock, and it's not just BlackRock, it's Goldman Sachs, it's Apollo, the big alternative asset firm, they're all talking about this. But notwithstanding that, they're going slowly and they're moving cautiously. So that's the second big hurdle, is the fact that these big centralized players are cautious about it. So the other hurdle is that the areas that are going to be most impacted by this are the ones where the blockchain is going to be able to bring huge power to it very quickly, and that's in the area of reducing the unit of scale. And let me explain what I mean by that. So right now, Fidelity, pick your favorite mutual fund complex company, they can offer a treasury bill product to someone who has a brokerage account super efficiently. You pay 3, 4, 5 basis points to get access to T-bill investment because it's on huge scale, it's billions of dollars, and the costs are very small to the investor to do that. But when you get into more sophisticated products and the ones that investors have realized that they want access to, which are alternative assets, and this is the class of assets besides just owning stocks or owning bonds, of which, T-bills is on the very safe end of the bond spectrum. That old model of having 70% of your assets in stocks and 30% in bonds has been dramatically outperformed by people who own alternative assets. Well, alternative assets are very, very process intensive to invest in. And so the people who offer those have traditionally had very high minimums of that. They've said, if you don't have $5 million or $1 million or even $500,000, we're not talking to you about coming into our fund, because it's so process intensive for them to bring you on board and onboard you. This is the huge differentiator for blockchain. We can take out all of these costs and make it so that you can serve a customer with $10,000 or less for the same amount it is to serve this $5 million investor who's typically, very high net worth or even larger institutional investor. So that's the hurdle is getting all the infrastructure in place to do that. But that's also the huge promise and opportunity. That's why we're building our software. That's why others are building software. We're not alone in doing this. There's a lot of healthy competition out there. So I went off your question about what are the hurdles and went from the hurdle is to get through this and get all these systems in place to lower that marginal size cost of units so that we can serve smaller investors in these investments that they inherently want.
Yeah, no, that's amazing to hear, Bill, because you're right about, the alternative assets. There's just more desire, but the barriers to entry and the portfolio size that you need is just out of reach for so many people.
Absolutely.
And this is the technology that will make it so that smaller investors can get involved in these things.
Indeed.
Now, we talked a lot about the stablecoin side with Archblock and what you guys are working on, and I had a few more questions on the lending side. And
Please.
You mentioned the crypto market makers was sort of the initial target, and there's so many other targets as well, and other people that can benefit from this, and not just in North America, but globally, especially globally with underbanked and unbanked people as well. Maybe you can talk about some of the secondary and tertiary targets and benefits of this technology and where else you're going to be taking it besides the crypto market makers.
You bet. So as the crypto market making lending marketplace collapsed, and it really collapsed just because of the decrease in the value of a lot of the underlying assets, and also the fact that a lot of these players withdrew from the market. Some of the big hedge funds and delta neutral and market makers withdrew because they were getting caught up in the same fraud issues that we were talking about before and had money tied up. As that happened, we then returned to focusing on emerging managers who are trying to serve inefficient underlying asset classes, and that this technology would instantly benefit. And so on our marketplace right now, on the Archplace marketplace, riding on the TrueFi software is a manager called Chorus, who we've been in business with from the very beginning. They are a asset manager who is lending to fintechs in the emerging markets. They call it the global south because that's a good way to describe a lot of emerging market countries in terms of the geography of where they tend to be. So on our platform, these folks are gathering assets from lenders who are interested in earning a higher, riskier yield, and that manager, Chorus, is deploying that to these fintechs. And so that's the example of what we're focusing on, is emerging managers who don't have easy access to go out to the large institutional limited partners, or LPs as they call them, who are going to write the $5 and $10 million checks. They're willing to today gather the assets from an investor. And now we're doing this on a fully KYC basis. We know who these lenders and investors are. We're doing it outside of the US because, again, back to the issue of there's not a lot of clarity on whether we can do this in the US. Our software and our team is built here in the US, but all of the actual lending and borrowing activity and the fund management is happening outside the US. We're focusing on emerging managers who can benefit from using our software and using our marketplace to gather assets for that. It's a tough environment to do that in right now because there's a real flight to safer investments in an environment where you can earn 5% on 90-day T-bills. Why would I take risk to lend to an emerging market fintech? Well, the answer is you can get up into double digits yield to do that, and so that's why people would do that. But that's what we're really focusing on now, and that's where we think we can really help is emerging managers who can't just go to regular old Wall Street and raise money that way.
Great, Bill. And so when you mentioned about the global south, I'm guessing that this is not just what I'm thinking, but what it brings to mind is the innovations that have happened in Central America and Latin American countries, their adoption of Bitcoin, even as a legal tender in El Salvador, but just the understanding that these digital currencies and this technology can really benefit the citizens of these countries, because as one part, their central bank currencies are just not doing very well compared to North America. And on the other hand, this is an opportunity for them to use fintech to get a leg up on the global scale, and for North America, who's predominantly been known as the best financial sector. I feel like this is a very big turning point for Latin America. I've been to the blockchain conferences in Latin America, and the innovation is amazing there. And I'm curious on how much of what you're talking about is that.
So what you're talking about is huge and really important. And again, because I always think in terms of analogies, in the same way that the telecommunications infrastructure was underdeveloped in terms of landlines when cell phones first became a big thing 30, 40 years ago. And all of a sudden, Latin America and emerging markets had much more cell phone penetration because of that. It's the exact same analogy here. The financial market systems in the emerging markets are way less developed than they are here. And so as a result, what are those economies doing? They are adopting this new technology, which bridges and makes obsolete needing to have traditional financial market. And the beauty of that is it's creating huge capital formation for them, the ability to boost these economies, even though they have domestic economic challenges, like you say, like their underlying domestic currency is very volatile. There's a lot of inflation. There's depegging of their currency. You move into crypto and it gets rid of all those issues. And so it's going to be an incredibly powerful engine for creating economic opportunity in those countries. And as a result, those places are much better at innovating. They're not better, but they're very aggressively taking advantage of innovating around that. And some of the best ideas are coming out of Latin America. We have one loan up on one of our existing funds that's to a Latin American fintech, which is doing exactly that, providing financial market opportunities that the local banking system is not. So we totally believe in what you're saying, and I think that's really important. And it's also just good for those countries because it's going to create economic opportunity and raise the standard of living.
Definitely, and that's great to hear. And yeah, I think it's really good for the citizens of these countries to embrace this technology, or just take the time to understand it a little bit more so that they can better their lives. So I'm glad that the Archblock technology is also servicing in those countries. It's very cool, Bill. Now, we don't have a lot of time left, Bill, but I want to look towards the future in what you and your team are working on throughout the end of this year and into next year, and any insights you have into where the industry is going and how you're going to service that.
Sure. So I'll take it in the two big parts of our business. On the stablecoin side, I alluded to, and we're not ready to make announcements about this, but the innovations in stablecoins are going to continue. And I'll be a little bit oblique here, but there are, and this relates back to your last question, Ashton, there are a lot of economies that have currencies that are actually pegged to the US dollar. And we think there are going to be tremendous opportunities to create stablecoins that allow those countries that do that to then have their local currency interchangeable with a stable coin that references back to that peg. And so we're working on technology and systems that have to interface with, again, very complex, real world traditional finance mechanisms. So we're spending a lot of time on that because we think that's going to be a tremendous opportunity. There also are a lot of local market developments that need to happen. So while we've developed non-dollar currencies, they're not usable in the local market that they're referenced to because of the regulatory framework. Well, some of those countries are now moving forward with regulatory frameworks and creating clarity around that. I'll mention some of the markets that are doing that. Hong Kong is creating much more clarity around that. Switzerland is creating clarity. Australia is starting to create clarity around that. So I think you'll see us focusing on trying to make it easier for the local inhabitants to use the stablecoin that's denominated in their local currency, which we've been prohibited from. On the other side of our business, on the asset management software side, on the Archblock marketplace side, you're going to see us developing more and more functionality that will make it more and more easy for existing asset managers or even emerging asset managers who don't have access to great fundraising right now to adopt our system incomplete. We've got a lot of functionality there right now, but there's a lot of smaller pieces because we're addressing a huge value chain of software that people use. Everything from, again, the compliance side to the capital formation fundraising side to the, once you've then deployed the capital, how do you manage those investments that you've made? So it's a lot of different pieces, and we're having to be very careful because while we have a big engineering team and we're well funded and we feel good about our position, we can't do everything all at once. And so what we're focusing on is trying to figure out which pieces asset managers want us to develop. And so that's what we're focused on right now.
Amazing. And that is a huge feat ahead on both sides, just reinventing the global financial system, essentially. So
doing our small part. Yeah.
Yeah. Well, props to you and your team, Bill. I really appreciate all the insights that you've brought to from all these answers. It's incredible, your wealth of knowledge and just how the world is changing so quickly. So it's great to be on top of it with your insights. And I wish you all the best and with you and your team moving forward to help revolutionize this financial system, and I thank you for it. For people that want to learn more about these topics that we're talking about and just what Archblock is working on both of these fronts, is there any place where they can learn more?
They should come to our website, come to archblock.com, and we're posting updates and things going on there. We're also out on TrueFi, which again is our open source protocol that people can go to the TrueFi forum, because you can participate, by watching what we're doing at Archblock. You can also participate by becoming a participant in the TrueFi DAO, and if you're so inclined, investing in True, which is the governance token for the TrueFi protocol. So there's a lot of different ways, and then you'll see us and the DAO members from TrueFi out participating in conferences around the world. So we appreciate any and all questions, and you can also just go to the Archblock email and send us a question. We may not get back to you that same day, but we'll get back to you. And actually, let me just say thank you so much for having us on. We really appreciate. The questions and the themes that you're coming across are spot on with what we're trying to do. So appreciate your support and having us on today.
Thank you so much, Bill. And I will leave those links in the description box below. All the best with everything with your team moving forward, and let's follow up in the near future.
Sounds good. Thanks again.